The only people who get it are the people who get it. Welcome to Understanding Home Mortgages. In this lesson, we will dive into the world of home mortgages and explore how they work. By the end of this video, you'll have a clear understanding of what a home mortgage is and its importance in the real estate market. Let's start by defining what a home mortgage is. A home mortgage is a type of loan that people use to buy homes. It allows you to purchase a home even if you don't have all the money up front. Instead, you make monthly payments to the lender over a certain period of time. Imagine you're renting a place. You pay your landlord every month to live there. But with a mortgage, you're paying the bank back for the loan they gave you to buy the house. This brings us to an important point, the difference between renting and owning a home. Now that we know what a home mortgage is, let's talk about how it works. When you get a mortgage, a lender, usually a bank, gives you a certain amount of money to buy a home. But there's a catch. You need to put down a down payment, which is a portion of the home's price. The lender also charges you interest on the money they lend you. Interest is like an extra fee for borrowing the money. So, when you make your monthly mortgage payment, part of it goes towards paying off the loan amount, known as the principal, and the other part covers the interest. To fully understand mortgages, let's learn some important terms. The principal is the initial amount you borrow. Interest is the fee you pay for borrowing the money. The loan term is the time you have to pay back the loan. A fixed rate mortgage means the interest rate stays the same, while an adjustable rate mortgage has changing interest rates. Getting a mortgage involves several steps. First, you apply for the loan, and the lender checks your credit score, which is a measure of how reliable you are at repaying debts. Then the property is appraised to determine its value. If everything checks out, you'll be approved for the mortgage. There are different types of mortgages. A fixed rate mortgage means your interest rate stays constant throughout the loan. On the other hand, an adjustable rate mortgage means your interest rate can change over time. There are also special government-backed loans like the Federal Housing Administration and the Veteran Affairs loans that have unique benefits. As a homeowner, you're responsible for making your monthly mortgage payments, which include principal, interest, property taxes, and insurance. To manage these costs, you might have an escrow account that the lender uses to pay these bills on your behalf. And don't forget, taking care of the property is vital. Home ownership comes with benefits. As you make mortgage payments, you build equity, the portion of the home you truly own. But there are also risks. If you can't make payments, you might face foreclosure, which means losing the home. To sum up, a home mortgage is a loan that helps you buy a home. It's a way to make home ownership possible, even if you don't have all the money up front. By understanding key terms, the mortgage process, and your responsibilities, you can make informed decisions about home ownership. Thanks for joining us on this journey of understanding home mortgages. Feel free to explore additional resources to deepen your knowledge. Thanks for watching.